Hello everyone, this is Mayank and welcome back to my channel. So today I'll be doing a screen share and I'll discuss about a particular small case which I have created for myself, and this stock has few companies. So I'll not discuss in detail about those companies, but I'll discuss why this stock has been added that particular small case and what is the purpose of that small case. This small case can give you tremendous return in the future, but the only condition is that you have to keep on investing. That is SIP mode of investing. If I have to give a reason why SIP mode of investing, this is a video already on the channel, but the crux of that is that you can average out your investing when you go for SIP mode in a particular stock. So even when the market goes down, when the market goes up, your investment keep on accumulating and then you get an average out. And this is particularly helpful when you are in a bear market, which is currently now. But before I discuss the small case, I discuss the constituents of that small case. Let me put you through this particular chart. So this chart has three elements. First, it says length of the market in months, like bear market in months, and this is for S&P 500, not for Indian market. Okay, then it says S&P 500 decline percentage, and then it says length of recovery months. So basically, if you see, it's through all the different bear markets. It's from 1956, 1961, 66, 68, and then sorry for the sounds, 1973, 1980, 1987, 1990, 2000, 2007, 2020 crash. So it's about all the different bear markets. So if you see, like one by one, I'll not go into detail of one by one, but first crash it took 20 was by 22% drop, and then it took around 11 months to recover. Then it was around minus 28% drop. Next, then 14 months to recover back. Then again it will see a minus 22% drop. Then it was 7 months to recover back. Then after that, when it was 1968, which is considered a major crash. Now I'm not that old that I have seen all these things, so that's the reason I'm discussing with the help of a graph. Now, if you see minus 36% drop, huge drop into 21 months, almost 2 years to recover back. Next was even horrible, which was called as a big crash. It was around 1973. Okay, people are giving example of the 1973 that can happen right now. Nobody knows whether it will happen or not, but people are giving example of that. So that time the market crashed by 48%, huge drop, and then it took around 21 months again, not 21, sorry, it took around 69 months to recover. 69 months means almost 7 years to recover from that crash. That is it. Like, you don't make money for next 7 months, 7 years. Not even making money, you don't even recover your cost if you invested before the bear market started for next 7 years. That's a huge amount of time. Then if you go further, minus 27% drop, it pulled back very fast in 3 months, similar to what happened in the 2020 crash. Like, it dropped by how much? Around 34%. It took only 5 months to recover. So if you give an analogy to that, I will compare this particular 1980 crash to similar to pandemic crash, 2020 crash. So these things are quite similar. The drop is also quite similar, like 27%, 34%. Not, there's a difference, but not that kind of huge difference. Recovery also 3 months to 5 months, not huge difference. So these are the different time frames. Like, if you go down further, it's minus 20% drop, 4 months again recovery, then huge minus 49% drop, and then it took how much? 56 months to get that money back or get that market back to the previous forms. That is around 5 years. Then next was 2007 market crash. A lot of people went out of stock market, never came back in 2007 stock market crash. And there where my first investment came after this crash, which from my mom's account, and she invested in HDFC Bank the first time in 2007 crash. I booked a profit a few years back on that. Okay. Just giving you context of it, that I remember 27 very personally because there where my family first entered the stock market. So 2007 it was minus 56% drop, and it took around 49 months to get it back. So this is the whole chart. Why I'm giving the context of it, because you can understand that if you're going into recession right now, what happened in the past, and if history repeats, these are the different time frames that has happened in the past, and that can also happen in the future. So this is the entire crash looks like. We are in a bear market or not. This is Nifty 50. If you see Nifty 50 for past 6 months, this is past 6 month chart from the peak. If you see current, I'll just take this thing from the current market. It has a pulled back last session, so I'll just take entire thing because I don't think it's a pull. I think it's just a fake pull. If you need information what is fake pull and all, probably we'll create a different short video, like not a long 10-20 minutes video on a fake pull. It's not a big thing to discuss, but maybe 4-5 minutes video on what is fake pull and how to identify a fake pull or not. If you are interested, in, let me know in the comment section. Maybe I'll create. A couple of comments had been given in the past, but unfortunately I couldn't create video on that. Maybe I'll create in the future if I get enough time and I don't get any other content on priority basis. But if you're interested, let me know in the comment section. I'll add it to my to-do list, and maybe in the future I will create on that video on how to fake pull and fake all those things, right? So this is the drop, that is around 12.79%. So that is a huge pull. So here's drop. Second, if you see BSC, so let's see BSC. So there's a drop here from the top of this year is around 4th April. Also, it's not even 2 months properly, but if it's the drop is around 13.22%. So now are we bottomed out? No, we are not bottomed out. History repeats. You go back to this, you see this, you will not see anywhere between 13-14%. Every drop is more than 20%, can go up to 40-49% also. So we are minimum to minimum, we are 7 to 8% away from the bottomed out. Okay, so this is how the chart looks like. Are we into recession? Yes, we are into recession. Have we bottomed out? No, we haven't bottomed out. There is enough scope to go further down. So these pulls, don't fall for this pull. These are not something that going to up. Like, this can happen. I'm not saying this will never happen. Nobody's seen the future, but past record, past data, everything says this is a fake pull. We will go much bottom, but we don't know where the bottom is, so don't do bottom fishing. In the last video I discussed that we should not do bottom fishing. Detailed video SIP mode of investing is there on the channel, you can watch. If required, I'll create a new video on SIP mode of investing. Same thing, comments, likes, will give me a signal that you need the video. Let's jump into the small case part. Before that, please consider small case part is only SIP mode investing, not total investing. So let me show you this first. So this is the what I say, small case what I created. This is a custom created small case. This is by me. Few stocks I bought also, like invested in this small case. First investment by me is done in this small case. You can see my buy price 3101, current price 3109. This is Asian Paints Limited. Small amount of money, invested 20,000 in this small case just to see how it works. You can see current value is 19,691, where I lost on 298 rupees, which is 1.49% negative. Now you can do a SIP mode of 1 lakh or 50 lakh or 100 lakh also if you want. I have done 20,000. I can increase, decrease based on whatever I feel right for myself. Now it is completely your discretion how much money you want to put in the SIP mode of investing. Now, saying that, this particular small case is my first small case. I've never ever created a small case. I downloaded this app, and since now it's correct time to go for SIP mode of investing, and I wanted to create a portfolio for myself. Now this portfolio, I call it, the name what I given is weatherproof, but I will call it as a 20-20-20 for myself. So what is 20-20-20? 20 is 20 years, 20% return on average on the small case, and other 20 I forgot. So basically 20-20-20 rule. So I just lost it completely. Basically, let's look at grow. So why I want to show it grow is, let SIP calculator, if I search, mostly grow will come. Okay, let's see if it comes or not. I have used grow before for this calculator plan. So yes, so if I click on that, if I open this, let's let it open. My internet is a bit slow here. So this is what it shows. So let's suppose I invest monthly 20,000. So I'll just reduce it to 20,000, and I want a return of 20% return. So this is around 20% return. Where the hell is this? Okay, and then time period is 20 years. Okay, so if you invest, okay, I got the 20-20-20 rule. So 20-20-20 is monthly investment 20,000. Expected return is 20% per annum CAGR, and time period is 20 years. So basically 20-20-20 rule. So if you invest in 20-20-20 rule, you will make a money of 6 crore 32 lakh 29,587% return. This is total return. This doesn't include inflation. Okay, this doesn't include inflation. This is the return what you will get in after 20 years if you can get a return of 20% CAGR. Now this portfolio, now coming back to the small case, this portfolio constitutes of some stocks which are coffee can stocks. Like these stocks have given tremendous return in the past, like good CAGR return. Not say last 1 year they doubled the money or triple the money. Will not go to that kind of discussion, but in the longer run they've given a very good return. I'll just open them one by one just to show the CAGR, but we'll not discuss in detail for these stocks. So let's jump into screener and I'll show you the name of the stocks and returns what they're given. First is Asian Paints. So if you talk about Asian Paints here, my internet is really slow. I just hate it. Okay, I'll just log in with my email ID. So you can see my email ID password will be blocked hopefully. So gmail.com. So I'll just log into screener and we'll look for Asian Paints. Okay, So if you look for Asian Paints, if you scroll down, scroll down, scroll down, scroll down, scroll down, the CAGR for return for last 10 years is 24%. So that is more than 20%. Past record doesn't say that future record will be like that, but company like Asian Paints have a market monopoly. Not monopoly, but they are a leader at least, if not monopoly. So I can think of that they can give at least 20% return in the going next 10-20 years. First company is done. SBI Cards is a new company. We cannot go for CAGR. Pidilite Industries, we can go for CAGR. So let's go for Pidilite here. PIDI. Hopefully I'll get it. Yes, Pidilite Industries. Let's scroll down further and see how it looks like. Further. So it's return of 30%, around 29% for last 10 years. We are talking only 20%. So most certainly we'll get this Pidilite. We know how popular this brand is, how monopoly they have in the adhesive, at least Fevicol, Fevikwik, Fevistick, all kind of different adhesive, right? So 29% CAGR, 20% definitely will get it. Most certainly will get it. Pidilite Industries, Tata Motors, Tata Consumer Products, we don't get the kind of return. Balaji Mines, Indian Railway and Catering and Tourism Corporation, so IRCTC. Balaji Mines, let's look into Balaji Mines. I'll come to that why I'm not discussing other stocks, because those are new stocks. We don't have enough data for those companies. Balaji Mines, if you go further down the line, they have given a 10-year return of 55%. Amazing. If even one of your stock doesn't give return, zero return, Balaji Mines will suffice all that return. So it's amazing stock. Let's see. Now, SBI Cards and Payments. Why SBI Cards and Payments here? Because the penetration of credit card is almost 3% in India, which has to go to 30% in next 10 years. And SBI Cards, I'm not saying that SBI Cards only gives credit card. HDFC Bank, Axis Bank, ICICI Bank, these new companies, right? Slice and all those things, partners with RBL and banks like IDFC. They also increase the credit card penetration. BNPL is nothing but credit card in one way. Then your postpaid or whatever you think, Flipkart postpay, Ola postpay, there's nothing but credit card utilization, basically credit utilization, right? So this credit thing will go further a lot. That's why SBI Card and Payment Services here, they are the market leader in terms of this particular credit card business, and they are going to grow a lot in the next 10 to 2 years, 10 to 20 years, because India will grow in terms of credit card penetration and utilization. Tata Motors, market leader. Next market leader, still a market leader in terms of EV. Definite next market leader in terms of EV business. If not Tata Motors, if not market leader, at least second rank. Who can beat it? Mahindra and Mahindra. Maruti can never beat it. Okay. So Tata Motors is going to be the leader in terms of EV in the India. Tata Consumer Products Limited is the next HUL. Why I'm saying it's next HUL? Probably I'll create a different video on Tata Consumer Limited, Tata Consumer Products Limited altogether to understand why I'm saying it's going to a next HUL in India. There was a video which created 1 year back on Tata Consumer Products Limited. You can go through the video and watch it again. But if interested, I'll create a new video because a lot of changes happened in the past 1.5 year in TCPL, right? The Tata Consumer Products Limited. For me, it's definitely going to be next very big FMCG company in India. Balaji Mines, I discussed already. They have a very good market share in a lot of things what they do. Detailed video definitely next time. Then IRCTC. IRCTC is a monopoly, will always be a monopoly, right? So IRCTC blind. Indian Railway going to change everything. Lot of trains getting launched, lot of new schemes getting launched. India is focusing a lot on improving the railway for goods transport, human transport, every kind of transport. They're trying to modify their stations, trying to sell auxiliary services, auxiliary products, and everything. So IRCTC is a stock to buy for the longer run. So this is the reason why this particular stocks has been added. And as I told you, these stocks are sufficient enough to give you 20-20-20 rule, which is, again I'll repeat, 20,000 for 20 years with 20 CAGR, 20% CAGR. You can get up to like more than 6 crores in the span of 20 years. And these stocks most likely can give you these returns. Reason I told you, some of the stocks are very good at giving CAGR of more than 20% in the past, and they have a monopoly kind of market leader, which they will come in the future. Other stocks are the kind of leader in the future segment. So card penetration is the future market, EV is the future. Then you say IRCTC is going to be in the future. Railway is going to improve tremendously in India. Tremendously, when I'm saying they're doing everything, every bit they're doing to improve the revenue and the profitability. You can see all around if you start noticing, railway has changed a lot in the past like 2-3 years. So this is the reason why the stocks are added. I will put you back here. This is very important. 20,000, 20% CAGR, 20 per year. You have to keep investing. When I say investing, SIP mode of investing, you will definitely get up to this figure, 6 crore 32 lakh 29,587 with investment only 48 lakhs of rupees, and that will not hurt you also because only 20,000 per month. You might not be able to invest 20,000 per month maybe now if you are new to job, or if for some reason you cannot invest, but definitely 5 years down the line you can. So slowly make up this thing so that your average comes around 20,000 per month, and you can come. I'm not saying exactly this figure. You might cross this also. You might come a little less this than this also, but it's a good number to have. Like for me, I'll think 6 crore of money if I make from stock market doing risk-free investing. I'll be like quite content with it. I don't want. I'm not in a position. I'm not in a mental frame of I want to earn 1,000, 10,000 crores of stock market. No, I want to have a my kind of life, which is more not into too much money, but yes, some amount of money is required. So this was the video. This was my understanding, my analysis, my thought about it. If you think it's helpful, do like the video, do share with your friends and family, do hit the subscribe button if you're new to the channel. Thank you so much for watching. Stay happy, stay safe.